All right, so welcome to the first Forex coaching webinar of the year. It's 2019. Happy New Year to all of you. And I'm Adam Khoo. And in this Forex coaching webinar, we'll be going through how do we identify high probability bounce and TC setups, trend continuation entry setups. And as a bonus, I've actually asked some of our fellow students who have been trading for a while to share their own experience about what has been working for them and to give their own tips to those newbie traders who have just joined us. So if you've just joined us, welcome to the community. And for those of you who have been trading with me for the last couple of years, it's really been an honor, it's been a privilege, it's been a lot of fun trading together with you every single day. All right, so let's take a look at a recent trade and how you would measure the stop loss and target price, right? So at a point of time, when you're looking at a trade, you'd see something like this as it's going up, right? So you're anticipating that it's going to hit the 50 moving average, so you're watching it. And again, when it hits the 50, you're going to enter right there. So again, double check that the previous swing high is higher than this recent swing high. And the previous swing low is higher than this recent swing low. So you've got to have that lower high and lower low. All right. Now at the same time, you could also check if it's a Fibonacci level. So you click on A, drag to B. All right. So A to B is your impulsive wave. A to B is the impulsive wave, and C would be the retracement wave. So you can see over here it's a bit small, but it's 50%. So the moving average coincides with the 50% retracement, which again is a good to have. It's not a must, but it's a nice to have. Gives us extra confidence, right? Let me just okay. So the next question would be again, how do we enter this trade? So again, if you're more aggressive, you could actually put a sell limit order right there to wait. So the moment the price goes up, it will trigger your order. But again, the risk of that is that if it doesn't bounce down, it could trigger your sell order and go all the way up, and you may stop out immediately. So that's the risk of that, of course, right? So if you want to be a bit more conservative, wait for the price to go up above the 50 and place your sell stop at the 50. So if it comes back down, you'll trigger your sell stop. All right. So the next question would be, okay, so where are you going to put your stop loss? So again, I'll measure from the moving average here. If I'm going to sell there all the way, hold on, all the way back down. So I'm gonna have my target price right at the recent swing low. So in this case, you can see it's 349. So 349, ignore the last digit. So it's 34, so it's basically 35 pips, right? So this entire distance, 35 pips. You may say, okay, let's be a bit conservative. Let's aim for maybe 30 pips, which is somewhere there. So if my profit target is 30 pips, where can my stop loss be? 15 pips, right? 30 divided by 2 is 15. So roughly 15 pips would be somewhere about there. 1, 2, 5, 6, 7. The stop loss would be somewhere here. Oops. One, 2, 5, 6, 7. Okay. And my profit target would be somewhere over there. So that will give me a 1:2 risk to return ratio. So again, let's see how this would play out. Now, again, before you take the trade, always check on H1, right? So bear in mind, this line you see, that's the stop loss, this is the entry, and that's the profit target. And I'm going to draw a red arrow, or rather a red line here at my potential entry point. Next thing is I'm going to go to H1, and again this trade has already happened, so let's go back in retrospect and take a look, right? So you always want to make sure that at a H1 level, not only is it on a downtrend, but you also want to make sure on a H1 level, your stop loss that you want to place is above the moving average resistance on H1 as well. So what does it mean? Now notice that on H1, which I am right now at H1, where's the resistance? The resistance is here, boom, boom, right? So the resistance, it is at the blue line, the 18 EMA, right? You can see that the 18 has acted as a strong resistance. So my stop loss, which is over here, which I drew earlier on, is above this line as well. So I want to make sure that my stop loss is protected. Always place your stop loss above your moving average resistance on both time frames. That means on a 15 and on a H1, they must both be protected behind the moving average. The same thing for when you go long, right? Your stop loss should be below the moving average at the 50-minute candle and at the H1 candle. This is really, really critical. So if it is not, then don't take the trade. Don't take the trade, right? Okay, so once you've checked that, you go back to your 50-minute candles and say, okay, it's a valid trade. And of course, goes without mentioning that you want to see that the 50 has been tested before, right? The 50 has been tested to be a strong resistance. So you're confident that this time, when it goes to the 50, it should bounce. Again, there's no 100%, but most of the time it will bounce, right? Okay, so what you could have done is wait for the price to go up, and the moment the price goes up above the 50, what can you do? Yeah, immediately place your sell stop order over there. So if it comes back down, which it did, you would trigger the sell order. So the next candle, it goes down, and goes up again, constipates, and boom, it hits your profit target. There we go. So this is essentially how you trade the bounce setup. Now, you could have actually traded this as a TCE as well. Remember that for TCE, the trend continuation strategy, you wait for a trigger, and we'll talk about that in a short while. So in a bounce, you don't wait for any candlestick pattern. The moment you see it hit, you get in, and that's it. So what's the advantage of the bounce? The advantage is because you enter near the moving average or at the moving average, what happens? Yeah, your stop loss is usually relatively far away. So it's a bit hard to hit your stop loss. That's the safe thing about the bounce. All right, to hit your stop loss, it has to break through and to really change the trend. If it does not change the trend continues down, usually it will not hit the stop loss. All right, so that's the good thing about the bounce, the advantage. The risk of the bounce is that because we don't wait for a trigger or candlestick pattern, we are really having confidence that this moving average will hold when it hits. And that's why you're going to see that it has been tested before. That's really important. All right, great. Now, for the next part of this webinar, what I did was, some of you recall, I posted on the chat group, I say, hey, those of you who have been doing reasonably well, I appreciate it if you can write to me directly and tell me about what advice you have for newbie traders. Because as you trade, different traders have different styles. And after a while, they find what works for them. And I find that instead of me telling you how I trade, I want you to hear from other traders as well. So it's just not Adam, it's not only Adam who can do it. Everyone can do it. And these people who are doing it, a couple of them, when they started off, they were losing. They had losing streaks, they busted their account, but they didn't give up. They changed, they improved, they learned, and now they're doing really well. So I want to show you some of them who have written to me and given me permission to share their advice and some of their recent results. Okay, so the first is Jeff Khoo, and these were his recent results, which are pretty impressive. He started trading in October, and so he's got 3 months of trading so far. And for October, you see he got 18R, and he got 10R for November, and 12R for December. So total of 39R, which is pretty good. All right, it's a 60% win rate on average. All right. In fact, over here you can see some of his stats. In October, he had 13 wins and 9 losses for October. November, he had 8 wins and 6 losses. December, 8 wins and 4 losses. All right. Now, everyone has their own unique styles of trading. Okay. This is summary of Jeff's style. So his preferred strategy is he focuses mainly on TCE. In fact, 90% of his trades are TCE, and he focuses on M15. Why? Well, he just likes it, right? And occasionally he will trade a bounce on the H1 time frame. To him, he says higher time frame alignment is critical, which I mentioned. And now he's got a unique style, all right, which is for Jeff. I noticed that for his trades, his target price is always below the previous swing high for longs, and above the previous swing low for shorts. And he always targets 2R. He always goes for 2R. So that's him, right? That's him. So in other words, for Jeff, if he's what he's saying is this. In fact, a couple of weeks ago, Jeff gave permission to post his journal online. So you can search back, you can download it, and you can look at actually all his trades one by one. And that's why I looked at it and I noticed that for Jeff, he ensures that when he buys here, for example, when he's going long, his profit target is always below this. He's always below the recent swing high. So he's always targeting, he never targets above that. That's his style. And he always wants to make sure that he can get 1:2 before hitting his profit target. And if he doesn't get 1:2, he won't take the trade. All right. So because of that, notice that he doesn't take that many trades. He only takes 12 to 20 trades a month. Right. In October, he only took 22 trades. November, he took 14. And December, he took 12 trades. So he doesn't even trade every day. So on certain days, you notice there are many trades, he doesn't take it because it doesn't give him 1:2. All right. So he's pretty selective with his trades. All right. And that's his style. All right. All right. This is his sharing. It says, "Hi, this is Jeff. I was once your student from Malaysia. Blah 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 blah. What does it say? Yeah, I only take high probability trades like you taught. Hence, there's only a few trades taken so far. I've been consistently profitable for 3 months since the beginning and having a 60% win rate so far." Yeah. All right. So that's Jeff. Now let's look at Oystein. Oystein, as you know, has just recently become a full-time trader. Just quit his job. He's doing it full-time. So I wish him all the very best. Okay. And Oystein is also the person who has helped to develop a lot of the scanning software of the TCE dashboard and all that. So very grateful for him for his great contributions towards the community. All right. And he's had really consistent results. In fact, he just posted that he's been consistently profitable for I think about 1 year or 2 years, something like that, if I'm not wrong. So it's great. And this was his recent result that he did send over to me. All right, this was I think August, if I'm not wrong. Right, so 56% win rate. Yeah, and about 10.53 R for the month, right? And but it's not updated. His updated ones are also very profitable. But I like to share with you his sharing. And again, like the man who contributes a lot, he decided to write a very long advisory, which is great, right? So I'm going to read to you what he said, right? Okay, he said this. My first tip is to start focusing on only one strategy, which I agree with, right? I know from personal experience that it's very tempting to go into the market and employ all the strategies learned. So focus on one strategy, master it, and when you are consistent, add the next one, which I agree with him, right? Yeah, please do that. My main strategy is TCE. I also take range setups. These are my two core strategies. TC counts for 60%, range 30%, and bull flag 10%. I have a slight different approach to trade management. I enter 2 trades instead of 1. Right? So basically what he does is, for example, he's risking 1% of his capital, for example, right? And from the position sizing, he's supposed to buy maybe 2 lots, for example. But instead of buying 2 lots at one go, he splits it into 2 trades. So one trade, he buys 1 lot, and another trade, he buys another 1 lot. So why does he split into 2 trades? Why does he do that? Because he has got 2 different profit targets. That's his own style, right? And there's nothing wrong, right? It works for him. So that I can take some profits at a specific ratio and run the second half of the trades for more profits if the trend continues. This approach gives me many small wins, but when I have that great trend, my biggest trade so far was 8R in one single trade, right? So if I'm not wrong, what he does is for half his trade, he takes profit at 2R or maybe 1.5R, right? You can clarify with him on the chat group. And for the other half, he doesn't have a profit target. He lets it run, and I think he watches it and puts a trailing stop loss, okay? For my stop loss, it's absolutely critical for me to use the ATR indicator, which actually is a good idea. The thing is, I don't use it because from experience, I gauge. But again, if you're not as experienced, you can look at ATR as well. So I use the ATR indicator to determine what's my minimum stop loss for this trade. So for Einstein, what he does is he always takes a stop loss of 1.5 times the ATR. ATR means the average true range. So you look at the ATR and multiply by 1.5, and that's his stop loss. If this amount is less than 8 pips, I will always take 8 pips minimum. All right, okay. I also make sure that my stop loss is always covered by a moving average, support or resistance, right? So that's what I mentioned, right? Another personal tip is to be very, very picky. There are lots of opportunities, but wait, the best setups are more rare, but it's absolutely worth the wait. Support resistant areas aligns with key support and resistance levels. These levels I usually draw from the H1 time frame, and they are both diagonal trend lines and horizontal zones. I look for at least 3 other correlating pairs going in the same direction. That means I want to see 3 other related pairs to have the same trend as my trade. If you want to find out more about correlation, it is in the videos, all right? It is in the level 1 Forex course videos under correlation. So I have got a video on that. Do watch it. Now at this point, maybe let me show you what he mentioned on ATR, for those of you who don't know what ATR means. So go to Insert, Indicator, and go to that. This one. This is Average True Range. Right, click on that. And by default, it is 14 periods. So just keep 14. I'm gonna put it black, easier to see. Boom. All right, there we go. So this is the ATR. Right, this is the ATR. So you can see the ATR keeps changing. Right. So find out the current. So what he does, he finds out if he wants to put a trade now, he checks the current ATR, all right, and he multiplies it by 1.5. So that's what he does. Let me see if I can show you how it's done. Let me get my magnifying capabilities going. Zoom. Okay. So you need to get your crosshair and put it there to see what's the value. Now I'm going to zoom in using my zoom. There you go. Okay. So what does it say? 0016, 0.0016. So that is 16 pips. There you go. All right. So right now for this particular pair, what's the ATR? 16 pips. So for Einstein, he'll take 16 multiplied by 1.5. What's that? That's 16 times 1.5. So he makes sure that the stop loss is at least 24 pips. So that's what he does. I mean, there's nothing wrong. You can do that as well, right? It's a more scientific way of doing it, all right? Now, okay, let me now share another one from CK Ong. And he's got a pretty interesting story. He says, I did well for my first 4 months and achieved 100% return on my investment. However, subsequently, the outcome turned bad. The main reason was I over-traded, right? He got overconfident and started, taking lousy, low-quality trades. So what happened? I took many low-property trades, thinking since the outcome is random, there's no harm in taking them. However, it pulled down my winning rate significantly. When I had positive profit from the trades during the day, I would have the thinking of just take one more to gain more during the night. Oops. Most of them, I just picked up low property trades and ended up with losing trades, and this reduced my net gains for the day. When I had negative profit from the trades during the day, I had the thinking that I must recover what I lost. Right? This is very typical. I lost money, I got to get it back. So you take a low quality trades just to make back the money, and most of them, again, pick low quality trades and suffered even more losing trades. Right? Very, very good lesson. And it says, this month I started my new account with Pepperstone and decided to start from fresh. I disciplined myself to take only high probability trades, to wait for such a trade to come to me instead of forcing myself to take a trade. That's what I said. This month, I only focused on TCE and took only 13 trades for the month. The win rate was 70% with a return of 14.2R. Right? That's pretty good. 14R. So again, take 13 trades and get 14R. Better than taking 30 trades and making 5R. Okay? I also learned how to control my emotion. Do not get excited when someone in the chat group alerted a possible trade. When others took the trade, it does not mean I must follow it. Very good. Even if they ended up with a winning trade eventually, I would feel that it's not wasted. I will not regret it, as I did my own analysis and decided to skip it because it's not a high probability trade. If I miss a good trade, I'll just tell myself that there'll be another good trade coming to be and I move on. I like this one. I would turn off the chat group notification if I decided not to take any more trades during the day, especially in the night. Okay. All right, cool. And this was his result in December. All right, after starting afresh. So he had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. He had 13 trades. He had 1, 2, 3, 4 losing trades. Okay, and 1, 2, 3, 4, 5, 6, 7, 8, 9 winning trades. So pretty good, right? So great lessons from some of our students over here.
Take this opportunity to thank you and share with you about my 1-year progression ever since I started learning about trading, learning about investing and personal growth with you. I actually started out with zero experience and I know nothing about trading and investing like 1 year ago. And it's really amazing that in this short 1 year period, I'm able to accumulate so much knowledge and the skills and the right tools to help me create additional income right now. And I'm really so grateful to you for teaching me and constantly supervising and guiding me, not only me and all of your students, especially in the Forex trading community. And I'm really grateful to you for that. To be very honest with you, when I first started out trading live in Forex, my result wasn't that great at all. But what I want to say is that because you have drilled me, you have trained me and built a very strong foundation in me in terms of my mental strength and stuff and level up me to the max. And for your constant supervising, constant improvising of strategies and new teachings and new learnings, and not to forget our super strong, supportive Forex community, this has helped me to move forward very quickly and recover from whatever bad situation that I'm in, and also make me consistent, making like 6R, 9R, 18, 20 Rs like every month right now consistently, and that's why it's what makes me feel so fortunate to be in the same trading group with you, as the 24/7 constantly like calling up for trades and then giving out feedbacks, positive feedbacks, negative feedbacks, and keep helping out each other, which is why this community and this Forex training group is so valuable and so priceless to me.
Alright, so if you like this video, you can subscribe for more videos by clicking on the subscribe button. If you'd like to enroll in our professional Forex trading courses, you can go to piranhaprofits.com. For live training courses in Asia, do visit us at wealthacademyglobal.com. This is Adam Khoo, and may the markets be with you.